Welcome to TheoTrade. This is Don Kaufman. It's April 16th, 2018. You are watching the Theo Night video just moments after the cash markets closed. S&P's right and around the number we've been looking for, the number we've been talking about extensively lately, 2682. And you can see again the S&P is closing right and around it. You know, they're moving around as I'm recording this because Netflix just came out. One of the major tech companies just came out with earnings in the after hours. I'll cut to it real quick. Netflix, it's up, it's down. It is all over the place right now. One of the more important things, rather than look at the chart in the after hours, is to look specifically at the bid and ask. Very few people are aware of this, but in an after hours kind of trade, you know, the chart will update, but so will the bid offer spread. This is the last price. That's the last price traded in the day. The bid and offer happened to be effectively live. You can see Netflix was expecting as much as, again, as much as a $25 move higher or lower. Now, that $25 move higher or lower is based on, and again, predicated from the options pricing. Right now, we're nowhere near that move. In fact, we're relatively unchanged on the Netflix earnings after hours, although it's driving the S&P futures. But more importantly, let's talk a little bit again about the S&P futures and some of the levels. So kind of day in and day out, and especially on the weekend updates, I've kind of been going over some really specific levels inside of the S&Ps. And it's, again, these levels, all we've been doing the last couple of weeks, as I've said, is just kind of pinging back and forth on these levels, and I'll kind of enunciate some of the levels once again, because obviously today we hit one square on. So right up top over here where we're currently trading is roughly 2682. Dead in the middle is 2626, and down below over here is 2575. Now, we actually hit right into that 2682. As I was talking about on last week's videos, I was relatively surprised that we did not crest and hit into the 2682, and even mentioned in this weekend's video that I think we have some unfinished business up and around the 2682, which obviously we've completed today. In fact, if you look on an intraday basis, you know, people always ask me how I pull these points out. Listen, these are not pivot points of any type, nothing of the kind. I happen to term them gravity points, and it has a lot to do with where trading firms, okay, ultimately have their positions and, more importantly, their risk. And these points, and again, I'll come back to the 30-day 1 hour, these points that we have tendency to look at, this is where in the S&P futures, there's kind of a seam in the risk. And when I say a seam, the way to kind of visualize a seam in the risk is really between, okay, a buyer and a seller. So for example, some firm may have tremendous risk in and around this region. Another firm has tremendous risk in and above this region, and it literally pulls us in the line like it's gravity. And these, again, these kind of tranches exist in the S&P futures because the S&P futures is used and are continually used to mitigate risk against basket portfolios. And that happens to be, again, what do? You know, if you're trading, for instance, SPX options and you're making markets in SPX options, use the S&P futures as the hedge. But even if you're trading a bunch of equity products and you're some trading firm, you may trade some Tesla and some Amazon, some Google, some Facebook, some Apple, some Netflix, some Microsoft, and you'll still use the S&P futures to hedge out the entire basket effectively of risk. And that's, again, it's really common to get the S&Ps that are trading inside of these tranches, these tight ranges. The actual points themselves, as we said, 2682, we get pulled to it literally like gravity. In fact, you're going to see us close here in just about 4 or 5 minutes. We'll close and probably close directly on 2682. It's kind of the happy place for the markets. Now, let's switch gears a little bit. Again, Netflix, as I said, just had earnings. Now the underlying is trading, well, you know, I can't even say substantially higher at this point. Again, we'll see what Reed Hastings has to say in the conference call coming up. But the underlying from the closing price, and as I said, you can always look at the bid offer spread from the closing price. We're just about 20 some odd dollars higher not too far off what was expected. I also want to give you a quick update on a handful of positions. I have positions inside of Tesla. Okay, these are in-out put spreads. They are in the money. We want them in the money. They are up in excess of about 30%. So if you have purchased these put spreads, they're kind of on the dance floor for where we'd want to close them. Another spread that we executed only last week has to do with, of course, Micron. So positions inside of Micron, these ones are right on the dance floor. This is a 52.5 50 put spread. It's pretty much broken even at this point in time. The stock's down very, very mildly. If you're interested in the Micron, I mean, listen, from a technical standpoint, we sold off, we bounced, and we expect us to sell back off, hence the bearish position inside of Micron. And we've been doing this time and again. I mean, that's what led us to the Tesla position as well, right? We sold off. We had bearish positions in Tesla when we sold off. We bounced, and now we're looking for the, the next leg possibly down. And we feel that way, of course, about the market as a whole as well. Now, one other position that may make sense in the coming days, this is something I wanted to spend just a few minutes kind of highlighting on this evening's video, has to deal with the VIX. So the VIX has dropped and we're back into the 16 handle. If we take a look at this on a chart, this happens to be a 9-month daily. The VIX is close to what has been the floor for the VIX since all the way back into early February. And when I say the floor, it's kind of the baseline of where the VIX has been over the past few months, is right in and around the 15 handle. As such, if you're bullish on the VIX, we could consider what is termed a VIX volatility spread. I'll go ahead and I'll kind of ballpark and build one of these VIX volatility spreads for you, but I'm going to go out and I'm going to tee up here about 64 days out, selling a 15 put. And I'm selling the 15 put to finance the purchase. And I'm going to open up a few more strikes here. I'm going to turn around and I'm going to finance the purchase of a spread. In this case, I might try to buy something like the 19, maybe 24 spread. This one's done for about a 5-cent debit. I mean, really, if the market opens a little bit more bullish tomorrow, this thing would be done for about even money. So allow me to explain the trade. So I'm selling the 15 put and I'm selling it naked. Now, if you go in here, you hit confirm and send, you're like, oh no, he's selling a 15 put naked. He could lose $15,000. Yeah, but effectively the VIX is not likely to go to zero. Right? Even if you zoom out, let's say in some wild scenario, the VIX really collapsed. Okay, where's it going to collapse down to? I don't know, maybe 11. All right, that would be just a wild collapse in the VIX. So even if the VIX collapsed down to 11, the most I can lose in here is what? $4. But we'll talk about mitigating that risk even further. So I could lose $4, but I'm selling the 15 put in effect to finance the purchase of a 1924 call spread. It's a $5 wide call spread. And what the trade breaks down to, what it looks like, okay, happens to be none other than, well, this. Okay, so this is our VIX volatility spread. It's a class we did back in the December of 2017. For those of you that are TheoTrade members, if you want to access the class and look at some of the criteria behind it, by selling the 15 put, we're capable then of buying a call spread. Now, some people don't like the margin that's held up in this. Inside of an IRA, it would still tie up, even if you're going to do one contract, it's going to tie up about $1,500. Well, you can further mitigate that risk by turning around. And here, I'll give you a quick example. You can buy something like a 12 put against it. Okay. And the 12 put, if it costs too much, you could roll that down to an 11 put. But what that'll is it'll knock down your buying power effect, from $1,500 down to about $400. Then the trade would look something like this. Okay, I'll delete the original trade out, leave it in here, but effectively what you've got is, all right, almost, I wouldn't say a riskless trade, because if the VIX starts to really, degrade again below about 15, you will start to lose money in this trade. But what it's giving you is a nice shot to the upside. Again, a wonderful shot to the upside with no really upfront cost. And that's, obviously the intent of the VIX volatility spread. I think it's a good consideration. It was brought to my attention by a client in the TheoTrade chat room. It's, again, a great interpretation of, the volatility that's come down, and a client that thinks maybe the volatility is going to come back up. And I have tendency to agree with them. And this is a trade that I'm going to be looking to execute inside of the next day or two of trade. With that, as expected, and we talked about this on the weekend update, as expected, unfinished business right up here at the 2682. From here, okay, even if we had a little bit of legs to the upside, I still believe that ultimately we're not just going to test the downside, but specifically, I believe we're going to be testing right into this 2575 level, which, okay, and you have to, gather some perspective on this one. People, that's 100 points lower than we're currently trading. Okay, do I necessarily think we're going to test it this week? Yeah, quite possibly. Late this week, we may actually see a 25.75 again, as we've actually run considerably higher. The volatility is kind of abated. This is the time. Catch your breath. Okay, get positions on. Don't overextend yourself into risk. If you need to hedge positions, get them hedged. But these are the types of times where volatility is contracted. From here, we look for vol to expand again. Thanks everybody for joining us on the TheoTrade video for this evening. Have a wonderful evening. Bye-bye.